Good evening, everybody. It's Doc here from OnTheMoneyOptions.com. It's Tuesday, January 29th, and I wanted to share something with you today. I get these questions to ask quite frequently. The first question is the China trade war going to hurt the market? And the second question I get very often is, are we entering a bear market? Well, I'm going to make it simple for you and answer both questions once and record this. Yes. The answer is yes to both of them. And I'm going to show you what has happened. But what I want you to understand, there are 3,400 securities listed on the New York Stock Exchange, and each and every one of them is a market unto themselves. What bothers me is that you can manipulate the major averages in such a way as to make you think something that really may not be happening. So let's take a look at something that will give you an idea of how to look through the market. What I'm looking at here is the percent of stocks above their 200-day moving average. And I've taken this chart all the way back to the year 2000. And what you can see, the dip in 2002, the dip in 2009, 2011, 2016, and then over here on the right, 2019. And as you can see, they're all about the same depth except for the Great Recession. So the point is that the percent of stocks that are above their 200-day moving average recently in 2019 fell to an average level that is consistent with other corrections that we've had in the market. Now, a correction or bear market is usually over 20% down. A correction's about 10% down. A bear market's over 20% down. So as you can see, we actually priced in something, you call it a bear market, call it a recession, call it the China trade wars, whatever, but we've already priced this into the market. Now I want to end up with just a list of stocks. If you're wondering, are these just stocks you're not aware of? This is a list of stocks that are down 38% or more. For instance, ING down 38%. Down at the bottom of the chart, PG&E or PG&E Corp, which is the California Utilities, down 67%. Some notables in between, Western Digital is down 49, let's just call it 50%. NVIDIA is down 46%. GE, well, let's skip GE. L Brands is down 43%. Halliburton's down 43%. Goodyear Tire and Rubber's down 40%. So as you can see, looking through this chart, there are a number of stocks that are way past the bear market level, and some are even into the depression level. So there are a lot of opportunities to pick up stocks that are deeply depressed at this point in time when the sectors begin to roll. So forget about watching what the index is doing and wondering whether or not we're in a bear market or what based on the S&P 500, and look inside the market to see what's going on and look at each and every individual as a market unto itself. So this is Doc from OnTheOptionsMoney.com. Until next time, stay hedged.